My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you, so call me at 1-800-743-CNBC or tweet me at Jim Cramer. Is the economy too strong for Washington to pass another stimulus bill? Are we in such good shape that we simply don't need the money? Is that the gamble our government's making, or are we merely dealing with partisan gridlock? After a day where the Dow inched up 2 points, the S&P advanced 0.52%, and the Nasdaq jumped 1.21%, well, this is something we're now going to have to start thinking about. See, 6 months ago, the world looked like it was ending, and everybody in Congress had an incentive to reach a compromise. Now, though, the economy's in much better shape, and both sides have an incentive to be more stubborn. They get to blame each other in the run-up to an election. But as Speaker Pelosi told me this morning, the possibility of a deal is still on the table. Still, I took her full statement as a sign that getting a deal done could be extremely difficult. I'm saying this purely in my capacity as your investing coach. Without a stimulus deal, there will be a ton of private company losers. And we could be in a much worse place a year from now, even if we get a vaccine approved by the end of the year. Too many struggling small businesses, they can't wait that long. Now, if you've got a white-collar job that you can do from home, you might not even realize how bad it can be out there. The future's fine for anyone who can work from home, whether we get another bailout or not. But for millions of Americans and their families who work in retail or restaurants, the future is very grim if we don't get a deal. Think about all the coffee shops and diners and luncheonettes and fancy restaurants. Their cost structure is really out of whack, especially in a world where they can only operate at maybe a quarter or a third or maximum half capacity. I don't have an exact number, but worst case, something like 15 million restaurant and retail jobs could be at risk. The Paycheck Protection Program, money's run out a long time ago now. I don't know how these businesses are hanging on. Most aren't from where I'm around, but maybe around the rest of the country, but they got to pay their rent, their electric bills, their insurance, and it's going to get cold. So all those seats outside are going to go away. Now, I know this. The stock market doesn't care about small business. It's not heartless. They just don't trade them. There's real rot underneath this economy. You just can't see it in the averages because the rot is unevenly distributed. And with the rally in tech masking everything, you might not see it at all, especially after Adobe, which has such long tentacles, reported a quarter that exceeded even the most bullish of expectations. And I've been telling you all week that one was going to be a good one. It's easy to be confused about how the economy is doing. The transports are on fire right now. That tells you commerce is getting stronger, not weaker.
All aboard!
FedEx just reported a magnificent quarter for the close. That sent the stock in the stratosphere. It's already up 100 points where it was last, really in the heat of the pandemic. We're also beginning to see a turn in the auto market. It's nascent. We got a home builder on tonight, Lennar, that reported a series of incredible numbers last night with an excellent forecast. Lennar builds homes in 33 of the top markets in the United States, and supply is tight in nearly all of them. We have ancillary markets like plastics, lumber going through the roof, appliance sales, amazing. It's easy to see how politicians in Washington could look at the data and figure we don't need another stimulus bill at all. Lots of economically sensitive industries are doing just fine. So then what am I worried about? Well, because until we have a vaccine in our veins, I think we'll keep seeing COVID outbreaks around the country. Hey, by the way, Israel opened their schools a few weeks ago, and then they just had to shut them down. Could that be happening here? I don't know. J.P. Morgan's been anxious to reopen and get people back in the office, but it sent home some traders today after a worker got COVID-19. Jersey just got a spike because of indoor dining. I doubt we'll have to go back into lockdown, but we're going to have to maintain social distancing for months. And social distancing is devastating to brick and mortar retailers and restaurants. Remember, America is a service economy. 2/3 service, 1/3 manufacturing. Right now, the whole service component is trying to go online and digitize as fast as possible. But not everything is equally digitizable, like sandwiches. Big companies, no problem. This morning, Marvin Ellison, the CEO of Lowe's, explained that he's turned his business around with the help of the internet. We know it's working for Walmart, which has become so technologically savvy that they want TikTok. Maybe that thing will be resolved tomorrow with Oracle getting it. We know it's working for Target. Their business turned around because of e-commerce, especially their shipping division. These big companies all use digital media to get the word out. They use the transports to bring the goods you order right to your door. FedEx is smiling. And they're all taking market share from smaller players that simply don't have the ability to compete on digital or delivery. The pizza parlor that can't automate, the burger joint with a product that doesn't really travel well, the men's clothing store where you really need to try stuff on in person before you buy. But they all have your size now. When will we recognize the rot underneath? Simple. When the banks report. More about that later. I believe we'll see the beginning of the bad loans that could reverberate through the whole financial system. Right now, there are rules that keep most people from being evicted, although the strength of those rules varies from state to state. There's pressure for the banks to show forbearance and grant extension, but that's only going to take so far. Right now, this weakness doesn't matter to Wall Street because small businesses aren't publicly traded, and we've got a fabulous bull market in the cashless, contactless economy. Yes, that's right, the PayPals, the Squares. Unfortunately, though, every time a state reopens, especially for bars and restaurants, you end up with the spiked COVID numbers, which means we're stuck with that social distancing until we get the vaccine. Which is why I keep coming back to the first point. I think we do need a stimulus bill very much to save these small businesses, put food on the table for these people. But the rest of the economy might be too robust for that to happen. It's tough to make the pitch that we need a bailout when so many stocks are making new highs. But the bottom line is that a vast swath of America still needs help. And if we don't get it, the future looks grim for small business and anyone who works for a small business. And that's millions of people who are going to be in trouble. Oh, one last very important thing. Earlier today, when I talked to House Speaker Nancy Pelosi on Squawk on the Street, I made a very stupid comment. It was a tongue-in-cheek attempt to make a point about the harsh tone of the negotiations in Washington, but it fell completely flat, and I apologize for that. As I said immediately after the comment, I want to make it clear that I have an incredible amount of respect for both the Speaker and, of course, the office she holds. Dean in Washington. Dean.
Booyah, Jim, from the great state of Washington.
Oh, fantastic! I hope that you're not so that you're not with the fires as my where the town that my daughter lived at in Oregon burned down. Jesus, this is horrible.
Oregon got hit bad.
This is
really
horrible.
Bad.
Well, how can I help you?
UPS. Have you heard anything about management changes lately?
No, well, we got Carol Tomei in there. She used to be at Home Depot, and she's fantastic. And by the way, after the close, United Parcel's competitor, FedEx reported a good number, and now that stock's flying. So you've got Carol in there right now. She's been quiet. I've been trying to get her on the show. I'm going to reiterate, Carol Tomei, please come on the show. I like United Parcel stock. Sam in New York. Sam.
Booyah, Cramer. First-time caller, long-time watcher.
Thank you.
My question is regarding Zoro. Soon after you had the CEO on your show, I became interested in the company and decided to take a position in it. Unfortunately, after Zoro posted quarterly results, they announced that its growth rate slowed to 8% year over year, so the stock tanked. I've been buying more shares on the way down, and I wanted to get your opinion on where you think Zoro will be in the short and long term.
I think that there are competitors that are in that space now that weren't when Zoro pioneered the space. And when Zoro was all alone, it was doing terrific. But now there are others that are doing as good a job or better, and it's price competitive. And that's why I don't know if that stock can turn around. Let's go to Lucas in Minnesota. Lucas.
Hey, Professor Cramer.
How are
it's
you?
It's really good to see tech crawling its way back. But I'd like to talk to you about some tech from our baby boomer boyhood. How do you feel about Tupperware?
This thing's made a remarkable comeback. I mean, this thing was just killed. And so what that says to me is, look, be careful. This thing goes down, goes up, but it did have a good last quarter. I don't know how it got down to 5. I got to do some work on this one because we used to, it was in the 80s. Let's find out. I hope I don't mispronounce this. Gita in Florida. Gita?
Hi, Jim. I'm a first-time caller on your show. And first of all, I really wanted to thank you for your expert advice.
Thank you.
And I really enjoy your show, and I watch it every single day.
Thank you.
The company that I'm calling about is a niche retailer that has benefited from this pandemic, and it has experienced growth in their online sales. They recently announced a 14% dividend increase. I bought the stock for $149, and it has taken a hit. What is your take on Tractor Supply?
I think Tractor Supply is a marvelous long-term growth story, and we don't care about where a stock came from. We care where it's going to. And over time, I think you'll be very, very well served by owning the stock of that incredibly fine retailer that caters to farmers and gentlewomen and gentlemen farmers. Okay, there's a real rot under this economy, and most of the country still needs help. And if we don't get it, the future looks grim for small business, which is why I keep pounding the drum that a deal needs to happen in Washington. Oh, man, buddy, tonight, can Union Pacific keep chugging along in an uncertain market? I'm sitting down with the CEO to find out what he's seeing. Then Lennar beat earnings expectations, but its stock still dropped after the report. I'm sitting down with the CEO to find out if it's a buying opportunity. And I'm going off the charts and looking at 3 strong names that have been flying modestly under the radar to see if they have more room to run. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.